Welcome to the Trading Market Technicals morning call video for Friday, February 21st. Big reversal early in the morning. Dow Jones up 92, Nasdaq up 29.5, S&P up 11, and the Russell up 13. We had our flash China PMI came out the previous day, Thursday night, late into Friday morning. Worse than expected, and markets were down. At one point, the E-mini was down at 18.17, as I indicated in yesterday's video. Right around after our numbers, our economic numbers, we had a mixed bag. Philly Fed was much lower than expected, and then we had a couple other indicators that were mixed, and it looked like to me markets reversed and discounted the fact that the number, because of, again, the so-called weather implications. So the markets rallied on that. Now, like I said, the markets, they're so wild right now, and quite frankly crazy. Several weeks back when we had a worser China number, the emerging markets really took it on the chin, and that started and fueled our market sell-off. And now they just totally discount the fact that the flash PMI came out worse than expected, and discounting everything, and they ran the market up higher. And remember, doesn't matter. Markets are made to fool the masses. There's no two ways about it. So you got to remember that. And markets don't make sense because I can go on and show you where I see major warning signs: utilities higher, healthcare higher, consumer discretionary lower, banks lower. Little bit of technology here rising. Semiconductors where we're strong. That was a good thing. Transportation weak, showing a major head and shoulders formation. So just alone in that, I don't even have time to tell you in this video the amount of warning signs I see and red flags I see. But yet the market continues to move higher. You as a trader, right, we are supposed to, what we do is follow what the trend is. Now, what we can do is, obviously, since we're so elevated, we're up literally 12 out of 13 days, and maybe 13 out of 12 days, counting yesterday, and straight up in a V formation. And that's just unsustainable. Can we break higher? We absolutely can. It depends on when the market wants to sell off. Let the markets come to you. Let it give you the signal, and then you react on. There'll be plenty of time to get short the market. We're not looking to pick tops. Topping is a process, and as we can see here, we've been topping for quite some time. I do think that we do break out and go higher in the longer term, but in the shorter term, I do think that the markets are vulnerable at this state. And I do like to nibble long, nibble a little short, and you get stopped out, you get stopped out. It's part of the game, but there's no reason to go all in here at this top. Take a step back and just let's digest what the market is giving us, and then so we can accurately make some positive assumptions on where we think the market may be headed. Again, that will also be we need price to confirm that idea. Okay. Now I'm just going to show you this. Not a big video, but I just want to show you a couple of things. Here's the EEM. As you can see, yesterday they opened lower and then they rallied due to the fact that the markets have rallied, and that's just as a precursor of what happens, in the overnight session when China opens. So if we open up strong, then the EEMs will at least stabilize and catch a bid in that session. That's exactly what happened. So EEM, but still below the 50, below the 200, death cross here, not good. To me, I think this is has plenty of downside, if not at least challenge these lows here in the EEM. So again, not a good sign. FXY. FXY, we have the markets rallying. Here's this V formation. I mean, literally 7 days down, 13 days up. And what's happened here? This has gone nowhere. To me, this is just, here's a pennant, okay? Symmetrical triangle, however you want to call it. And this is me breaking out higher. And I think the next test is going to be the 200-day moving average. So if we were rallying so significantly, this should be down, and it's not, okay? That's another red flag. And the other red flag, which I'll show you, is bonds. Bonds are not selling off at all, and they are the smart market. Remember that. Stocks above the 50-day moving average. Here's a logical spot for top, logical spot for sell-off market to resume its downtrend. So again, another warning sign here. Okay, VIX. VIX did not break down, as you can see. Now, in all fairness, the market participants could actually literally be buying protection. So that's another reason why the VIX did not sell off so dramatically. But most of all, the VIX did not sell off, and that's something that is a concern again. Um, you know, Remember, guys, the markets again are made to fool the masses. So just make sure you're aware of that. When things look really, really easy, maybe it's too easy, if you know what I mean. U.S. dollar. We're sitting right here underneath this ascending triangle. Now, the U.S. dollar kind of stabilized. Let's see what happens here. It needs a lot of work to get up to the upside, but you know what? Keep an eye on the dollar if you're trading commodities. That's something that you're definitely going to want to take a look at. So right now, U.S. dollar kind of stabilizing here at this 80 mark. Let's see if we can get back above that 20 and that 50, and then at least challenge that 200, and then maybe we get something going here with the commodities. All right, so here's the spiders, the GLD and the TLT. Just kind of overlaid them on top of each other. Again, bonds not moving. Gold moving higher. S&P moving higher. Something's going to give here, and that's something that I want to keep pointing out to you guys. That and remember, you cannot trade long. Of course you can. And as a matter of fact, you should be trading long. If the markets are giving it long, you should be trading long. Look, there are a couple of areas where I thought yesterday that I think that the markets might want to pull back, and I mentioned to you in the chart segment. And the market just ripped higher, and that's fine, But if you wait for your pullback, wait for your extension, and the market's blast through, it's easy to manage, But again, this is something here in the bigger picture that this is a warning sign to me. Now, everything could alleviate and obviously continue to move higher again, but I don't think that's the case this time. S&P weekly chart, as you can see here, still good. Longer-term picture remains intact, guys. There's nothing wrong with the longer-term picture. Okay, outside day reversal now to the upside. And we are basically, literally, just about right here at 185 on the spiders, looking to challenge the highs again. Take a look at. Oh, you know what? Let me just show you the. Here's that. Here's the monthly chart of the E-mini S&P. We had an outside month reversal. Okay, now we're coming to the end of the month. I highly doubt that we're going to have a confirmation of this candle, so we'll reset again. And we haven't gone anywhere. You can see you can literally see the month here. We haven't gone anywhere. So let's just see. Let's keep an eye on things. But it's quite funny how we haven't gone anywhere here. All right, here is the hourly chart, and this is what I was looking at. I was mentioning to you right up in here. If the markets can break right up in here and fail underneath main pivot, that would be a great spot. Remember, we held that 1817, that 200 period, held that moving average area. And again, give or take a couple of points. Here's your real 1817, 1820. That's your real area of support. And look what happened. It held. It tested again and then rallied. And then this is an hourly chart. But if you dial down to a 5-minute chart, you could see that it was sitting here underneath that. That was a good objective short. And again, your stops are right above it. You get stopped out, and then that's it. After that, the market just continue to rally here at the end of the day. Okay, so let's get back to the charts. And here's the concern to me. I mean, if you look at it, you have. I'm just going to draw a line here, and then you got your head here, right? Here's your left shoulder, right? And then I'll label it again, but I just saw this, and then here's your right shoulder. Okay, your neckline comes in right here. And I'm going to label this chart tomorrow over the weekend, guys, when I do the analysis. But, I mean, look at this. This is a head and shoulders pattern. Okay, now, head and shoulders patterns haven't worked. But you're right at the top here. Head and shoulders pattern is ideal. And we start to break. Don't forget, we need to break. And then, of course, we get a back test before we go lower. But now, we did have a nice big move up, an outside day reversal, but it is forming a head and shoulders pattern. It's something that we want to pay attention to. Remember, even if you're day trading, you still want to know what's going on around you, what the world markets are doing, because that would give you a better assumption to understand where we're headed. And if the markets are very, very bullish, then there's no reason why you'd want to take a short unless you're selling relative weakness, an earnings downgrade, an earnings miss maybe. But this is just something interesting here that I think is bigger trouble. Okay, here's the IWM. IWM breaking that bearish rise and wedge. And look, we're just back testing it. Okay, we still haven't gone anywhere here. So again, another warning sign. One of the leaders have now broken the long-term uptrend line. Here's the Qs. Qs did okay. Apple was down at one point, but kind of managed to stabilize here. And then we have the diamonds here, another weak one. Diamonds have been really weak of late, and we need to see the Dow Jones start to break up a little higher here. But again, weaker than expected. It is above the uptrend line, which is good. At least it regained its uptrend line. But again, it's just barely sitting on the 50-day moving average. Not too exciting. GLD. Now, if you're long it, I would be either trailing up stops or I'd be out of it. We had a nice big call up in here. But again, guys, why GLD is up is the bigger factor. Why hasn't this thing sold off yet? And that's something that is a little nerve-wracking to me. Here's the XOP. Now, oil and gas. I want to talk about that for a minute. And I also have another sector that I want you guys to keep an eye on. XOP, nice. I like the way it bounced off of this trend line and looking to break higher. Next pullback, next higher low would be your cue to dial into this ETF and look for the top 2-3 charts, and then if you want, of course, look to start trading them. So now we have a confirmation that there's interest in here. Now you could have actually even bought it, but I like to get all the averages. I like to see it move up, one back test, flag into a higher low from this previous low, easy to manage, and then I would look again to get in for a longer term trade. So XOP is on my radar. XLE, and like I said, now this had a bearish pattern. You could have, after the breakout of this candle and that small little back test, you could have gotten short here. But to me, and I keep saying it, I'd rather not short this because this is the oil and gas stocks, the oil drillers, the oil service providers, USO is all bullish up until May. So if anything, any weakness you want to look to buy. Okay, so this is something that that I'm going to be continuing watching, and I would not be looking to short XLE. I'd be dialing into the ETF. And again, take 2 or 3 out of that basket and look to trade it. Okay, USO, same thing. USO, what can you say? Beautiful, beautiful base, breakout, and then rally. Now, again, it's extended. Do you get in and chase? Absolutely not. Wait till it get at least to the 200-day moving average, or even below that. Let it base a little bit. So it has a little bit work to do before you enter a long trade. But again, if you see crude rallying, that's going to bode well for obviously oil stocks. Okay, here's the ITB home construction. We do have existing home sales today, so keep an eye on that. If you're long, it will affect the ETF itself. Home construction here doing well. I mean, just sitting above the 20, back above the 50. I'd like to see this come back in above the 50. At least let it dial in. And believe me, if you're patient enough, it will come to you. And here's the XHB. Finally picking up here. Not bad. I like this here. Remember, break above this area, which we have. You have a little bit of a thin zone here, so we have plenty of room to run to the upside. So again, anything in home construction on any market weakness, I would be either adding or starting to accumulate a position. And you can even trade it during the day because they actually trade. They trade very well. Here's the Lennar, another one of my favorites. And here's Pulte, as you can see, PHM, another one just consolidating here, looking for a next leg up. I love Pulte and also KBH. I mean, this base is just to die for. This is something exactly what we look for. Now, you could even start accumulating here. Obviously, you break below the 50, you take a stop. You get down to this. You get down to this area here, and then you look for another entry point, which your stop would be below this entry here. So you got easy to manage in this KBH. Now, you have to be patient because obviously it hasn't really moved quite well as the others, but this is another good one here, guys. Okay, XLF, the banks. Again, another red flag for me. If we're moving higher, banks should be moving higher. Banks basically participated just from off the lows, but haven't moved and extended its gains after it hit resistance here. And again, it broke the long-term uptrend line from the November 2012 lows. Okay, Citibank. What can you say? Just a real disaster. I mean, this thing is just can't pick itself up. And this is coming off of a beautiful run, and all of a sudden now, I mean, it just got crashed. And this thing here is looking for some sort of stabilization. It, to me, your pivotal high is going to be 50.30. It needs to break above this to alleviate any downside pressure. JP Morgan, obviously the better of the bunch. But again, I like to see it come in. On any weakness, I would definitely be a buyer of banks. And, of course, builders. And remember, we talked about solars. They're actually doing quite well. And then lastly is Apple. And here's what I want to show you. IYR, which is a REIT. Okay? It's a real estate investment trust, and this is the ETF. Now, look at this big, beautiful move run. And if you look at it, right, and if you really take a good look at it, you could see, and I just bring this down a little bit, you could see that it's actually built a beautiful base here. Okay, now here's a double top, but it was making lower lows and lower highs, and now it's really starting to get some energy here. Remember, we do have an interest rate rising environment, and if that happens, they're going to bode well for this. And if you go into IYR, there's a lot. Some of the REITs they don't trade well because they're low volume, like this Simon Properties, Boston Properties, HCP. Some of them are okay, but the best thing to do would buy the IYR. I'm going to look for a nice pullback in this IYR into this area, and that's going to be on my radar. Okay. Now remember, I also mentioned First Solar. Um, this is, I think you're going to see $75, maybe even $90 to $100 in the coming year. Within a year here. This is a broke bearish symmetry, as you can see. Beautiful, beautiful downtrend, and now starting to explode higher. And if you look at the TAN, which is the ETF, that's where I got my Q. You can see here, this is where I got my cue that, oh my gosh, look at this, we're moving higher, and these solars are going to start to take off too as well. So people buying the ETF TAN, and that's where I had mentioned First Solar, CSIQ, JSO, JSO, even the smaller ones, Yingling, YGE. Take a look at them, guys, because any weakness, they should be bought, and you should be building a position on. Alternative energy will definitely be the spot for 2014, and with higher oil prices, you're going to get them moving in sync. And you would say, why? It's alternative energy. But when the oil prices rise, the theory is people flock to solar and wind energy. Okay, but definitely something to keep an eye on. Definitely have a lot to look at, and there's plenty of opportunity. Even if you sit it out for a few days, let the markets digest the move. Let it tell you what to do before you start reacting and start putting a lot of money to work. All right, guys, have a great day. Enjoy the long weekend, and we'll have a big report on Monday. Take care, everybody.